maybe the single most actionable piece of advice I'd give folks is at this point, treat your first crypto investment, whatever form it takes, as education, not a bet. Right? This isn't, we're not betting on the outcome of crypto in the next 30 days, because I'll tell you what, I've been in this ecosystem for a decade now, and I couldn't tell you which way it's going to go.
Many pre-retirees and retirees are curious about crypto, but intimidated by it. Why should someone in or near retirement even consider learning about digital assets today? And what real-world value might crypto offer that traditional investments do not? Well, here to talk with me about that is Philip Martin. He's the Chief Security Officer at Coinbase. Welcome, Philip.
Thank you for having me.
Yeah, a pleasure. So let's start with that question. How should retirees think about, or near retirees think about crypto?
Yeah, I think just like any other diversified portfolio, crypto can be a component of a retiree or near retiree's assets, but also I think they should think about it as something that's really important to learn about, because you look at major household name financial firms, BlackRock as an example, who are putting out Bitcoin and ETH ETFs, right? After doing a ton of diligence on these assets, is really a vote that this is here to stay. And it's here to stay because not just because it's new and interesting and techy and fun, but because there are actual real world use cases for these assets. Faster, much faster and cheaper cross-border payments and remittances, the tokenization of assets, that is taking a real world asset like a real estate or similar, and sort of being able to transact in that asset purely on the blockchain and crypto with no or very few intermediaries, is really potentially a game changer in sort of how the underpinnings of finance work in the country.
Yeah. So I think one of the things that people are intimidated by is the language of crypto. You just mentioned two things that I think will give people pause if they're listening to us right now. One is, you said, the tokenization, and also blockchain. I think people may have maybe some working knowledge of it, but then maybe they don't. Tell us what they need to know about those two terms in particular.
So blockchain is really just the underpinnings of how cryptocurrencies move. It is an extremely complicated in implementation with lots of details and corner cases. But really at its core, I think what most folks need to know is it is a public. Anyone can see it. Anyone can sort of write to it. Immutable. It can't be changed after something is confirmed in it. Record of transactions in a given asset. It is not, broadly speaking, there are some exceptions to this. It is not anonymous like some people think it is, but it is pseudo-anonymous, right? Names aren't in the blockchain. Addresses, but when an address, you can think of an account number. Addresses are present there, which is a little bit different than we're used to from a pure privacy standpoint, right? If you hand someone $20, there's not a record of that, right? That's publicly auditable, which is good and bad, right? Depends on if you ask law enforcement and the ability to track and trace crime, which they love about the blockchain. But you talk to some of the more privacy centric folks who can be more concerned about it. Tokenization is really taking a real world asset, whatever it is, fund, a treasury, real estate, gold, whatever comes to mind for you. And instead of, let's take real estate, right, where you might invest in real estate via a REIT or similar vehicle, instead taking that asset and breaking it into sort of chunks on the blockchain. So instead of thinking of that blockchain like it's just moving currency, it can really move anything that you can imagine in the world.
Yeah. So a lot of people, when they think about crypto, might think about not only the reward, but the risk. Right now, we're in a bit of a downdraft. And as you think about what are the biggest risks that people need to understand as they think about how crypto belongs in their long-term financial investment plan?
Sure. So I think the first thing, and you mentioned this as well, is just the straight up market risk, right? Crypto is still a relatively volatile asset. It's also a relatively young asset. Um, so prices can swing dramatically. I think this is not the kind of asset that you want to put short term funds in. This is a long term investment decision that you're making, um, and you need to be able to ride out swings in an asset value. And if that's too much risk for you, I think you should really think twice about crypto as an asset class. That said, I think it does have that, and we see very clearly that long term upward trajectory, that smooths those dips, those peaks and valleys out. Um, I think the second thing, and this is linked, right, is there's a lot of behavioral risk. There's a lot of fear of missing out in crypto. And so if you're an emotionally driven investor, somebody who, maybe has a hard time taking those long-term views of assets, I think crypto is going to be a really hard asset for you to be in. Because you get those high highs, and then you get the troughs like we're in right now in a way that, you're probably not going to get not as much, at least if you're investing in a bond portfolio, for example. Investing in crypto, you do have to be aware of your online and your security risk, right? You have to be focused on the ability to secure those, whether it's a Coinbase account or anyone else, to secure and protect those accounts.
Yeah. We'll talk more about that in a second. I want to talk about asset allocation. You've sort of mentioned how much to invest in crypto. When I talk to financial advisors, they often say, well, maybe 3 to 5% of your portfolio. And I think a couple things. One is some people suggest that it's a inflation hedge. Others suggest it's not. Some people say it's hard to correlate this asset with your other assets that you may own, stocks, bonds, cash, et cetera, et cetera. What's your take on asset allocation? Is 3 to 5% the right amount for someone who has a long-term focus?
I mean, I'm the farthest thing from a financial expert there, but I think I have a couple of principles when I think about this for myself and how I advise friends who ask me this question. One is, cap the downside, right? Like a personal rule of thumb that I have is for risk on assets. If it went to zero, it would be disappointing, but not life changing, right? So that would tend for me to lead to that 3 to 5% range, but that's going to be different for everybody. The second thing is dollar cost average, right? Build it up gradually. Regular small purchases over time are going to help to sort of even that price point out. And then, I think as you think about allocation, the way I think about it when I think about this is you have core assets, right, that are funding essential expenses, Social Security, conservative bond ladders, pensions, annuities, whatever it is, right? That stuff needs to be there to fund your core lifestyle. Crypto should not be the source of your grocery money, right? Like that should be an extra layer on top of that. So when I think about those principles and sort of work backwards from that to get an allocation that makes sense for a given portfolio.
Yeah. Good advice. So you spend your workday thinking about cybersecurity, and for folks who maybe are thinking about investing in crypto for the first time, what should they look for in terms of choosing a cryptocurrency platform or an exchange that they can trust? What's the rules of thumb there?
Sure. Obviously, I'm going to advocate for Coinbase overall here, but let me just give you the rules of thumb that I would use in general here. Number one, ensure and I'll take a step back here real quick. These are the kind of things that you should do for any counterparty that you're thinking about investing with, whether it be in crypto, in traditional finance, in private placements, whatever it is. This is the kind of diligence I think any investor should be doing. First of all, make sure that you understand their status as a regulated entity and what sort of third-party audits, exams, whatnot they go through, and what they share or are able to share of that. Right? Coinbase, for example, is regulated by the New York Department of Financial Services, among many others, um, and goes through extensive audits of various kinds on the commercial side, including things like PCI and SOC 2 and others. And so that's really, really important. You want that third party looking over the shoulder of the company that you're doing business with, making sure that they're doing the right things and things that are in the best interests of their customers. Number two, and this goes a little bit along with number one, but like really understanding um, the level of transparency that these companies engage in. As a public company, Coinbase were required to issue public filings quarterly and on an annual basis that are really quite extensive on the state of our business, how we do business, the risk factors that we see in the market. And I would really encourage folks to read those. Right, we spend a lot of time and effort on those. And I think there's a lot of great information in there. But it means we can provide so much transparency to our customers. And I would encourage anyone looking for a counterparty to find one that is extremely transparent. Um, the third thing I would think about, does this platform work for how I want to use it? Is it fit for purpose for me? Are you going to show up one day, set up a recurring buy for $5 a week for the rest of time and just walk away? Great. Are you someone who's going to actively trade every day and maintain positions and, want more complicated features? Great. But make sure the platform you're using has the feature set, whether it be that sort of simple recurring buy or that sort of advanced trading experience, or even derivatives and things like that Coinbase also offers. Like meets your needs and is able to be used the way you want to use it. I would also say, maybe this is the last thing, look at track record. Right. And third-party validation. Look at how long has this company been in business, right? Coinbase has been around for quite a while at this point, 13 years. And that third-party validation, who else is doing business with this entity, right? Coinbase is a good example where, you know, 17 of the crypto ETFs chose to do business with Coinbase, where we have significant large financial institutions who have done their diligence, kicked our tires thoroughly, and chosen to do business with us. I would look for that kind of third-party validation in any counterparty that we're considering.
Yeah. Philip, we're going to take a short break, and when we come back, I want to talk about those ETFs and also scams that involve crypto. So don't go away. Welcome back to Decoding Retirement. I'm speaking with Philip Martin. He's the Chief Security Officer at Coinbase. Philip, before we took a break, I said I wanted to talk about some of the scams that involve crypto. The FBI has reported that those who are 60 and older experienced $2.8 billion in losses because of crypto scams. And I'm curious, what are some red flags that older people especially, need to be on the lookout for as they think about crypto being the source of scams or used in scams?
It's scams targeting retirees, targeting vulnerable folks in general are absolutely despicable. And unfortunately, they are something that we have seen not just in crypto, but across the financial ecosystem, right? Whether they be scams that prey on loneliness, scams that prey on the hope of financial gain, or someone's in a financial sort of risky area. It's cruel and despicable. And I think there are a number of sort of signs that I point folks to think about when they want to consider, is this a scam? Is this too good to be true? Really, the first one there is, if you're being promised returns that are risk-free, they're guaranteed, any sort of terminology like that. And this goes whether it's crypto, not crypto, really any asset. That's a huge red flag for me. Anyone promising risk-free returns is promising more than they can deliver. Number two, and this to me is a very, very important risk factor, is pressure and urgency.
Mhm.
Anyone that has your best interests at heart is not pressuring you to make an instant decision. Limited time window, you must act now. You don't have time to call your friends and family, whatever it is. That to me is a huge red flag. Anyone who's an honest broker working with you is going to want you to make an informed decision, and want you to come to be sort of fully invested in that decision rather than rushing through it. I also think there's an element to that of scammers want to isolate you. Right? They don't want you talking to friends or family. They don't want you taking time to have a conversation with someone else about it, because that kind of thing frequently leads the victims realizing they're about to be scammed.
Mm.
And so I think that is an important recommendation from me to folks, is that financial decisions, especially significant ones that are going to impact your retirement, should not be secrets. It should not be something that you keep from your friends and your family and your closest contacts. This should be something that you're willing to talk over, right, with a trusted um, advisor, whoever that may be for your individual circumstance. And if someone's telling you not to do that, I think you need to think really hard about if that person has your best interests in mind.
Yeah.
Um, yeah, go
Well,
ahead.
in cases where we've had another guest on, an expert in scams and schemes, and he said that if someone is suggesting that you use crypto as the means of transfer, that could be a red flag. Maybe it's a romance scam, maybe it's a family member distress scam, maybe it's a government tech impersonator scam, et cetera. That if they're asking you to to do this in crypto, maybe you should take a step back in a way.
It can be for sure. Just as gift cards can be, just as wire transfers, Zelle can be. It's one of many tools used by scammers to get money from their victims, just like sort of the more traditional financial ecosystem can be. I think the important thing is less about the medium. The important thing is about the message. I think that's the durable set of signals to look at when deciding, is this a scam or is this not a scam?
What, from your perspective, is a safe, secure entry point? What does that look like? And I'll start by saying that in my personal experience, limited personal experience with crypto, in one example, someone convinced me to invest in a crypto, the name of which I forget, but I had to use a trust wallet and had to create seed words. And for the life of me, I don't remember what the seed words are or how to get into the trust wallet. So I suspect that maybe that's the best advice, is if it requires you to memorize 9 seed words, maybe you ought not do it that way.
Yeah, look, I think you can go deep into the crypto ecosystem, and as you say, set up your own wallet with seed phrases, and this is the equivalent of deciding to do your banking in a jar, under the bed. Um, Now that's okay, right? I'm not saying that's bad. You just need to realize how much complexity that you're adding to your life by doing that. And so my suggestion for folks getting into crypto for the first time is to not do that, is to use a third party, someone like a Coinbase, who takes care of the complexity for you. All right. And you can interact with Coinbase the same way you would online on a website with your bank or your E-Trade account or other brokerage or what have you, with the same level of simplicity.
So when I think about investing in crypto, maybe in those ways that you mentioned, I think 18 ETFs that are on your platform. Is that the easiest way to sort of get involved in crypto, is to buy an ETF that's traded on a public exchange, and maybe it's a broad-based ETF as opposed to a single crypto ETF? Or what's your thought on that?
Yeah, I think that for someone who wants to dip their toe in, that's probably the easiest way to get exposure at this point, is via one of the ETFs. Um, And then, as you get more involved, or if you get more involved in the crypto ecosystem, move into a platform like Coinbase that allows you to do a lot more with that crypto than the ETF will let you.
And what does that mean, do a lot more?
Let's say you buy Ethereum, for example. In the ETFs today, it's sort of a buy and hold, and you're going to make money based on the price appreciation of that asset. On a native platform like Coinbase, what you could do if you wanted to is something called stake that asset, which is a way to get a return on that asset through a process called staking, which is really participating in a community validation scheme for the asset. And so that's available on a platform like Coinbase, where it's not today through ETFs. Similarly, if you wanted to actually use that cryptocurrency to participate in the larger crypto ecosystem, maybe you wanted to interact with a lending platform, or something like that. You couldn't do that with ETF assets. You would need to hold the native asset to do that.
Yeah. So, looking ahead, when you think about developments that could occur in the crypto and the blockchain space, What do you think retirees should keep, or near retirees should keep their eyes on? And I'm reminded recently that the government is sort of now involved in making crypto sort of more acceptable to the world, right, from a regulatory perspective. So what should we be paying attention to?
Yeah. So for those that are at the very beginning of their journey and are more comfortable with something like an ETF, I think we'll see those continue to expand. More offering, more types of products, both individual asset ETFs as well as basket ETFs. I think those give folks exposure through sort of familiar wrappers. I think, I mentioned that tokenization piece, and I really do believe that's going to be the next tidal wave of financial innovation that individual retirees, near retirees, really everyone will experience. And I think this is really cool and interesting because it is going to mean faster settlement. It'll mean 20% more markets, and it could mean lower costs and wider access to types of investments that have been traditionally hard to get access to the investing public. I think you'll continue to see, improved regulatory posture. As you mentioned, with the Genius Act passed, the Clarity Act is there. We see similar developments in Europe. And so the regulatory framework around this, I think, will continue to grow and develop, which is a good thing for consumers because it gives them more confidence in the platforms and the assets that they're investing in and interacting with. And maybe the single most actionable piece of advice I'd give folks is at this point, treat your first crypto investment, whatever form it takes, as education, not a bet. Right? We're not betting on the outcome of crypto in the next 30 days, because I'll tell you what, I've been in this ecosystem for a decade now, and I couldn't tell you which way it's going to go. But
That makes two of us, by the way.
Yeah, yeah. But what it is a step into a technology and an asset that is continuing to become more central to the financial ecosystem and is going to be central to either of these retirees' financial considerations or their children's.
Well, Philip, I'm afraid we've run out of time, but I want to thank you for sharing your knowledge and wisdom with us. It's so greatly appreciated. Thank you.
Thank you so much.
So that wraps up this episode of Decoding Retirement. We hope we provided you with some actionable advice to help you plan for or live in retirement. And if you like what you hear, check out Living Not So Fabulously for honest, real-life stories.
This content was not intended to be financial advice and should not be used as a substitute for professional financial services.